How's everyone doing today? Let's see, actually. I think that's good. Can you guys all hear me?
Yeah, Rob.
Cool. So,
Yep, we can hear you.
cool. So, for the past 2 weeks, maybe 10 days or something, I haven't been able to get my AirPods to connect to Zoom. They're connected to the computer, but they just won't connect to Zoom since that last update. And I don't know why. I I gotta ask every time now, so I gotta run my computer speakers again today. But no worries. How's everyone doing? How's your weekend going? Good, man. Right on. Cool. So we're just gonna run a session on gold today. One of the reasons is we've never done it. Another reason is we've had some members ask about it. So it did kind of range here for a while. We didn't really get into it. We did get some movement from gold finally, so I figured this kind of be a good time to do it. Who knows? We might even set an all-time high now that it's got some momentum. So just looking on the higher time frame, we're gonna go a little higher time frame with gold because I just want everybody to see the picture. So this is kind of what happened with gold. We went to take the high and we weren't able to do it. So basically price came back down a little bit. And right now we're still wondering if gold is going to tank or if it's going to run the all-time high. Then we had, and if you're wondering, the weekly is bullish, the daily is bullish, and we are bearish on the 4-hour, which we'll mark in a second here. But the daily's clearly bullish as long as, let's see. So this was our high we ran here. So the pullback probably didn't occur till here. So for me, this is likely the daily low. So as long as this doesn't get run, daily's going to stay bullish. I don't foresee that happening anytime. And let's see. Whoever that is, can you remove your annotations? Because I don't actually remember how to do it. Is this it? Oh, here we go. Cool. Never mind. Don't worry about it. Anyway, so we're bullish on the higher time frame. So there's a couple of things going on. As we know, recently gold started climbing again. I was actually, so the 4-hour is bearish. Let's actually mark that out before I get into it a bit more. So we had a high here. This high gets broken when this wick gets run. So to me, this would be your low, your high, your low, and then you have a high. And at this point, once we break this low here, gold turns bearish on us. So, well, that actually never candle body closed, hey? It might be wrong, but this might be a low on Oanda where it's where it was a candle body close. But either way, we are bearish. We didn't really, I think, unconfirmed bearish, I guess. On Oanda, I think for some reason I'm confirmed bearish at this point, but that's fine. Nonetheless, there's a couple things to look at here. So I don't know if anybody's seen my post on in the Discord, but this area here has had more volume transacted through it than gold has in the last 12 months. So this area here is the heaviest volume I've ever seen gold have in history since the Forex chart is available. So just with that knowledge alone, we know it's either gonna, I'm guessing it's gonna aggressively go up, and I'm guessing that was the BFIs buying their inflation protection, their recession protection, because if everything goes down, gold is guaranteed to go up. Anyway, at this point, we are bearish. So we just look at it here. So this 4-hour zone, we're going to pull the range. So we haven't officially broken yet. We have wicked above it. So we'll call that a 4-hour supply. Our last demand would probably be this little guy here. And that's about all we're going to mark on the 4-hour right now. Recession next year for the US is likely. Yeah, and I think that's why the Fed's been really hesitant on raising the interest rates. They know it's coming and they're probably not wanting to deal with it. I know Canada just raised our interest rates, and I imagine we're going to have a recession here in the next 6 to 12 months. So that's kind of our macro analysis. So bullish on the daily and the weekly, gold, and 4 hours on confirmed bearish. This kind of threw me because I'm pretty sure it was confirmed on Olanda, but that's totally fine. Anyway, so we got a couple of biases going on. One of the things I do want to make note of too right now, maybe we'll see it. One of the things I wanted to make note of too is the size of the bullish candles we're getting. So obviously very aggressive. We got some momentum to the upside, and then we very aggressively come down. So that's kind of where we're at right now. So at this point right now, we're going to play price forward and see what aligns. So we are currently in a bullish order flow on the 15-minute. And we're nowhere near London yet. So we're just going to fast forward a bit. So 6:30. Okay, cool. Now, what we can see here is we are reacting to the supply. If you want to get really technical, we could probably say we're reacting to something in here. Let's actually check. Just a little bit cleaner on 20-minute. 30 minutes ugly. We'll go with the 20-minute. That's a pretty clear supply zone. It gets engulfed. We got momentum. We got everything we like to see in a POI. So at this point, with us being unconfirmed bearish on the 4-hour, for us to start shorting, I would like to see something, some sort of a chalk on something. Now we can see, let's see. So that's not really anything. Don't think we've done anything quite yet, so we'll just carry on here. There is a sort of a demand zone right here on the 12-minute. Nah, you know what? I don't really love that. And this is one of the things we are testing right now. If wicks to the upside and body break to the downside is something we are wanting to continue with chalks. If that's the case, we would consider this a chalk, and we did get tapped in. However, this is before the London kill zone, so even if I did trade London, I likely wouldn't be at the charts. Now, we do have a sort of a break structure here. You could almost classify this as some sort of a POI. Let's see. Again, not the cleanest. Like I said, depending how you view the market, you may view this as a chalk. This is something I am currently testing to see if I want to use wicks to the sweep side and bodies to the break side. So we'll kind of carry on here and see what we get. So we did get a rather aggressive reaction here. So we obviously are reacting to something in here. We are getting continuous breaks to the downside. So if we just look at this quick, we have a break here. You have another break here. So we are breaking substructure. There's definitely something. You do have some big candles here. I'm not against trying to short due to our 4-hour. And on the 13-minute here, we do get some clear momentum. We do get an engulfing candle. So here we can see about, I don't know, what is that, 4, 5, 6 candles or so, all gets engulfed by one after it liquidates. So we can kind of go investigate this zone here and basically see what we get. So we did get a divergence here, and this is actually where we chalked from. So we'll classify this as our chalk up. And then we will classify this as our chalk down. So there's definitely some stuff in line here for us to short. And we obviously have this trend line liquidity here. To me, I would totally try to short off this any day of the week. There is some higher time frame backing. So I would likely take this whole zone. And just to keep back testing really easy, any orders we put on, we're going to put them on 25% of the zone, because more than likely that is what I'll do in the live market. Now, let's see. So that's only 7 pips. We could probably cover just above that high, because gold is notorious for wicking us out. So that puts us at about 110. We'll go a pip above.
Hey, Rob.
Hey.
On these wicks up here, would you pull that too or no?
Where are you looking?
Give me 1 second. On this one and this, would you pull these right here or no?
On the 1 minute, I likely wouldn't. If there's something there, you know, on the 30-second or 15-second, I might consider it. But right now, this is kind of the zone we're looking at. To me, these are so this is the clear up candle that gets engulfed. As of right now, that is the area of interest. To me, it's always where the chalk comes from. There's usually an extreme and there's usually a decisional. In this case, it's all kind of in one area. So I'm willing to look at a little bigger stop. Now, if we just go back, that's how I view it. And like, to me, like I said, I think on the, the 13-minute, we get two bearish engulfing candles in a row. I'm more than happy to try a short from here. We are unconfirmed on the 4-hour as far as unconfirmed bearish. And I definitely wouldn't be shooting for the moon here. So we'll keep our trades, you know, within reason. So gold's been, until this week, it hasn't really moved that amazing. I know a lot of guys have been messaging me over the last 2 weeks, questioning their trading abilities, and it's been tough the last few weeks. It really has. I think the market's been quite unstable with all this Ukraine news. I see liquidity in the trend near a supply. Correct. So you did actually get a reaction here to Marco's zone. I think that was Marco that was talking. Not sure.
No, that was what I was talking about, that week right there. So I didn't know.
Oh, okay. She may go without us. And that's totally fine. Did we miss one? Oh, we totally did, hey? All right, so this kind of hit TP. So I'm going to take that order off. I'm going to take that off. I'm going to say it went off this chalk, guys. So we completely missed that one. That's totally fine. And this is, again, going back to what we've been discussing in the last few Q&As, whether or not you consider this a chalk or not, depending how you do it. So this is a case where wicks to the upside and bodies to the downside did work. So far, the data has been really good on it. I may use it for 10 to 15 minute. I don't think I'm going to be using it for entries. So with that in mind, I'm going to say we had the bias right, but I'm going to say this was our top. So we totally missed that one. And that's no big deal. We will just keep going here. Now, what do you guys want to see to buy this back up? Same thing as always, right? We want some sort of momentum, something to show us that there is willingness to go up. I'm really bummed out we missed that, but yeah, just kind of play forward. And just before we go forward, actually, let's see. So we are starting to get a divergence, which could mean we could be finding some kind of bottom. We'll just scroll through, see if we do have. So 11 minute, we have some sort of a supply. I don't love it. 14, that's a bit ugly, but we'll take that. So you have some kind of a supply zone here. So at this point, let's see. We'll just see if there's anything. So I kind of try to find the supply that's going to break the quickest. And I think in this case, it doesn't change no matter what we do. Now, the other thing is too, if you do get a candle body closed below here, this becomes a flip zone. And unless that happens, I personally wouldn't be willing to short off of this. So again, we'll do a quick scroll through here, see if we do get anything. So as of right now, I don't think any supplies have changed, still the same. So it's always a good idea to give it a scroll through because sometimes the 12 minute will break a lot quicker than the 15, let's say. All right, cool. So we do get some sort of a reaction. So I'm going to get rid of this supply because it's not really doing anything at this point. Call this 15 demand. We'll just retract this one. And once again, we're going to scroll through and look for the cleanest POI. So this is a bit of a subjective area. You have a POI here, and we got a 10-minute here. When the zones are this close together, and there's really no point in pulling two supplies, you can do something like this and just kind of classify them together. There's really no gap between them when we scroll through. So I really don't see the purpose of pulling this little doji and then pulling this whole black candle. So we're just going to pull it as one big zone. It is a little bit ugly, unfortunately. And we are going to look for a reaction. Something I want to make note again. Let's actually just have a look here. So we're also in a 2-hour demand, which I'm not going to bother pulling because the chart's going to get really ugly. One thing to make note of is the size of the bullish candles once again. If you look at these bearish candles coming down, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. And we're already halfway back. Probably, I'll bet you if I pulled the fib, we're probably at 50% of this impulse or more. And no, you don't need to. This is more for demonstration purpose. So we're already over 50% back. And we've only gone 3 or 4 candles. So that to me is a measurement of momentum again. This is your trend line liquidity, more or less. So this is kind of a good zone for us to look for a buy. Now, the next thing we have is a weak high. This high didn't do its job and it didn't run this low. So we can view it like that. And that's something we've been pushing in the Discord lately is momentum, size of candles, and POI selection. I know a lot of you guys have definitely improved your game on that. Just gonna kill Discord. 2 seconds, guys. Okay. I'm also going to kill that. Cool. Now, we're still waiting for our POI to get tapped here. So we're kind of in dead volume time. We're just starting to get some volume here. All right, cool. So we are finally tapped into this POI. Get a nice little divergence. So again, a lot of momentum. Let's see. So now we're kind of waiting for our chalk to get complete here. So that would be our chalk complete. So we have 2 zones right now. We have this zone, which we could do the entry tool, and we have this zone, which we'll throw our entry tool on. So again, I'd likely throw an order on 25% on either of these with a limit. And the theory is we're wanting to, at the bare minimum, run this week high. If we just actually go. Yeah, I think that's about all I'd shoot for right now. We do have momentum to the upside, so you could even do something like run this week high, leave a runner to see if it'll run that. But I would definitely pay yourself something there. All right. So we never actually got our top in. We're waiting for the 25% mark. Oh, all right. So we did get our top in. At this point, what we would be doing is this order would no longer be valid. And once we get a candle body close above that, I'd go break even on this as well. So we'll do our 25%. And let's see, that's actually a really small stop for gold. Could probably go to 9 pips or so. And so we actually did run that already. So this was our initial profit target. And that put us at about 5R. So let's say we partial out 60% there. And then I would leave a runner on to possibly go and see if it'll take this high. So again, we've paid ourselves. We've taken 60% off. Your break even. What is the maximum stop you use for gold? I don't know. I don't really have a set number. Like I'd be willing to take, if it's in a direction of 4 hour and I see momentum and I do get a good deal and it's priced well, I wouldn't be against taking a 15 or 20 pip stop on gold. If it's counter trend, I would say 15 would be probably max. But following momentum, I'm not against taking a little bigger stop. I wouldn't get too hung up what's your max stop. Like if you can pull a trade out and still get a 4R out of it instead of a 5R, those trades do add up over time. And coming from me, that's kind of funny because I am like the king of wanting the tightest stops possible. And I can't tell you how many trades have wicked me out and ran the target without me. Let's actually see what else do we have going on here. So we did break some substructure here. So you have this as a demand zone. And we obviously broke this zone. And this is again one of those really ugly zone situations. You know what? Let's pull this one for now. If it comes down below that, we know we have a demand below that. Let's see. So we do have momentum, and what we can even do is just mark this out just so we know it's there. Call it a 15 key level. Sometimes I do that on my chart just to clean it up a bit and have a few less zones. Probably don't need that or that. Okay, cool. So we did get a really aggressive reaction. At this point, I would probably, let's play a few candles so we can get rid of this zone as well. And you did hit your TP here. So that's 16R. If we partialed out 60% at when we ran this high, which was, I believe, around 5R, you got a 3R there. 40% volume on the remainder of this. You probably got another, oh, I don't know, somewhere in the neighborhood of 6 or 7R. So altogether, you're probably about 8 or 9R on this trade, which is pretty good for gold. All right. Let's actually see. So this is, again, a lot of momentum, a lot of upward push. The expectation now is we ran a high. We expect a pullback. So the expectation is pull back to this zone or pull back to this zone here we don't have marked. And then a continuation in the same direction of momentum as order flow is bullish. Now, something to make note of. Do you guys see what's going on here? I'm not really a trend line drawer, but if you look at it from a sense of who's in control, demand zones are holding. So as long as demands are holding, we're going to continue on buying. If we're going to sell, we need to see 10 to 30 M chalk. Right now, my bias has switched from sells to buys. And that's just simply following momentum. Notice how we didn't sit here and we didn't mark out 15-minute trend. We've been kind of slowly getting away from that. And now we're kind of looking more at 4-hour trend. And if you are marking 15-minute trend, that's totally fine. But at the end of the day, take a look at who's in control, supply or demand, and which way momentum's heading. Right now, nothing about this is telling me to sell it. Selling this would be suicide when you see candles like this. And if we just go, so we can actually, we're going to pull this 2-hour zone here. It's fresh. 2-hour supply. Cool. And since we can see what happens, I'm going to just get rid of that. So, cool. With that in mind, the expectation is a pullback and some sort of a continuation. And we get a doji here, so there's likely a reaction coming, and it'll probably go down at some point here. And here we get our bearish engulfing. So we can even go as far as pulling the wicks of the candle. So the way I like to see a zone get tapped is I like to trade from where the body is, but I will still pull the wick. And the reason being is I've had a lot of trades do this to me lately where they just take off and they never tap the body. I've for the most part, I've only pulled bodies, and EU and GU have literally been just tapping my zone and leaving. So with that in mind, all right. So we got a tap here, which is definitely something we want to see. And now we can just kind of see if anything presents itself. Oh, guys, we missed the flip zone too. So this is actually a flip zone two. I'm just going to reduce this, move it to the side. So this is actually a flip zone. If we look right here, for those of you that like risk entries, this could be a risk entry. We're going to throw one on. So this is an absolute massive stop. So for whoever was asking me how big of a stop would you take, we're going to take a really big stop. And I would likely take heavy partials here. And this is where you look at this realistically. Let's say you hard TP this one at 5R, 5 or 6R or whatever, and then you land another 3.7. You're done for the day. You got 2 trades that went, and this has been the hardest thing to do for me. I don't even actually know if I could bring myself to do this on gold, but you got a 3R here and a 4R there. Like, that's a good day. And if we get a good chalk here, we can also enter that. So we'll just move this to the side. Not a big trade, not anything that's overly impressive. And still don't have our chalk here. There may be something here on the 15-second that doesn't look like it. Like these little wicks might be something, I don't know. On the 1 minute, we're still waiting for that chalk. So you do get it here. And I'll just back this up a bit. So you do get it here, which gives you 2 little zones here. So you have that, which really didn't do anything. And then you have this zone, which would likely be the first place I would look for an order. And we'll just carry on. Speaking of that, let's just pull a 15 zone too while we're at it. So we have this zone here. All right, cool. And this is something really noticed with gold and NOS, that sometimes the stop is large and it's ugly, but you knock a couple of these off a week, it's still worthwhile. If you're looking for a pair that's going to give you, 10, 15R all the time, this is not that pair. Some days it will. A lot of days gold, you're lucky to get 5 to 8R. That's kind of the zone that I found is pretty realistic for it, even 4R some days. The good thing is when gold moves, it moves very quickly, very aggressively. All right, so at this point, I would likely have these orders off, and if it came back, I would at this point pretty much look for a reaction. And reason being is we've broken a bunch of little 1 minute supplies heading up. If I'm gonna get tapped in on a limit, I want it to happen, within reasonable amount of time. If not, the limits go out the window for me. So you did nail off whatever that is, 3.7R on that. And let's just go back to the 10 minute. So you can see our momentum up still following through. And you do have a zone here. I'm not sure if I would be too keen on buying off that until this 2-hour supply gets broken, but nonetheless, it's you know, some sort of a demand zone, I suppose. And we'll pull this as a 15 zone too. Again, wouldn't be super keen on buying from these zones, but just to mark them out. What time are we at? So you're probably past trading time for gold at this point. Let's see. And if we go back to momentum again, you can see the size of the 4-hour candle. At this point, when you see something like this, you pretty much keep buying till something on the 2 or 4 hour completely fails. Your earliest sign would be 10 to 30 would fail. But at that point, you don't know if it's a complete failure or if it's just a break of something on the 15 and a just a retracement so it can continue on up. Like I said, I likely wouldn't be looking for any more trades at this hour. So you can see we completely disrespect that zone, come right through it. Now this is 115. Not big on Tokyo gold trades, but seeing how we got through this backtesting sesh quick. All right, so at this point, we get a body break down here. A body break above that would be our chalk. I did have a buddy that did trade gold through Tokyo, and he said it does give you 1 or 2 trades a week, which is about what Euro or GU gives you for Tokyo.
I think indices does as well too.
Yeah, I've caught a couple NOS trades in Tokyo. All right, so we do get our chalk. Let's just throw this. Oh, this is forex.com. We don't have volume on forex.com. If I had to guess, I'm going to say this would be the volume zone. So here you have 2 choices. Yeah, that's kind of the old style of chalks. This actually didn't break anything, right? So our old style of chalks was wicks to the downside, body up. If you went with that, you would have already been tapped into this trade here. For myself, I'm still waiting for bodies on still waiting for bodies. So this would be a zone you could look for a trade. If you're really smart, you'll probably cover the low. That's actually not that bad. So that's 9 pips. Let's go 3 below. It's not bad at all. You know, it's pretty reasonable for gold. So you do get tapped in. Like I said, I don't know if I'd actually try to trade gold during Tokyo, but it did hit a POI. We'll see if this does anything, and then we'll probably end the session here. Let's just see. So with this in mind, what is that? That's a 3.2R. Let's see if we get 5 out of it. If we get 5R, I would likely take heavy partials. That is our trend line liquidity. That should get run If that gets run, you can take you can take your partials and then leave a runner on to run that. That's probably dreaming, but let's see. So I would take my partials there. I'd probably close 60% of this trade out. You break even, and you could shoot for the moon and try to target that. If you're unsure of where to take something, look at what's weak, what's strong, and then look at the zones. So none of these zones really did anything aside break a little substructure. And the only thing they did was create trend line liquidity. So at this point, we're going to target that liquidity, and that would be my first target. So the top of this liquidity happens to be 5R. If it happened to be 4R, I would probably pay myself there. It's not guaranteed. And then you can leave a runner on to see if it'll hit that or not. I haven't had too many runners on gold that went to TP. As soon as you get above 10R, this pair seems to come back and take all your money. So we'll end this session here, guys. I just wanted to do gold since some of you guys asked. Next Sunday will be member testing. So if you are interested in testing Forex pair, gold indices, whatever you want to do, let me or Brian or Nathan or somebody know. And yeah, we'll roll with that, guys. For those of you that don't know, tomorrow is still a holiday in a lot of countries. I don't know how much volume there is. With that being said, I probably won't even get up and look at the charts tomorrow. I'm going to wait till Tuesday myself. If you do get up and look at the charts, if the volume's really low and the market's doing stuff like this, like you see here, I likely wouldn't touch it. You need some sort of movement to get involved. Don't play in this stuff because you'll likely become liquidity. And with low volume, there's a good probability that'll happen. So just be careful with that, guys. Can you please explain the new divergence? It looks kind of large. Yes, I can. So what you guys have noticed in the past is before we were, let's actually go to the 1 minute. Yes, we updated divergence. It's actually good you asked. So in the past, what we were getting was a divergence was just going from candle wick to candle wick. And what we were getting is way too many divergence signals. So Brian came up with giving us the option of using candle bodies versus candle wicks. But we went a step further. And rather looking at bodies or wicks, the divergence only get pulled from pivot points. So if you notice, nothing goes from candle wick to candle wick. Everything goes from candle pivot to candle pivot. And what we found with that is we got less divergence signals, but they were a little bit stronger. And then the other thing is too, is we turned off the hidden divergence, which is your continuation divergence, the red and green lines. If you want to turn them on, it's in the settings, just hit the check marks. But the whole concept of this was to give us less signals, but signals that had a little more authority. So this is why you have such a large divergence line here. It's not pulling divergence from this candle to this candle because that's not a pivot point. It goes across and looks for a pivot now. And like we said, the signals got a lot more accurate. So if you get a really large line like that, don't panic. It's supposed to do that. We did put some testing into this. And like I said, we got a lot less lines, but they were better lines. And it was just a higher probability setup. I'm actually quite a big fan of using pivots as divergence. We were going to leave the old option of just using just bodies or wicks, but they threw about 3 times more signals, maybe 4 times more signals than pivots did. And the accuracy of the divergence just wasn't there. So this has been like a huge game changer. It's definitely something you guys will want to test out. And basically what it is if you see a divergence line appear, you're likely close to a top or a bottom. So at that point, we wait for our chalk. And once we get our chalk, you are good to short. But if you got a chalk with a divergence, to me, that's an even stronger play. So it goes like this: price action first, divergence second. If you see a divergence, don't start shorting just because you see a line. It's meant to add confluence to what we show in the course. But if you see a divergence and your MA crosses and you get the test dot along with a chalk, that's 100% a higher probability trade than one with just a chalk and no divergence. So it's definitely something I use and utilize. Like I said, guys, it's number 2. Don't worry about the lines being longer. It is better. It's higher quality and there's less signals, which is ultimately what we were trying to go for. But yeah, we'll end this session here, guys. Thanks for coming out. And like I said, somebody get a hold of me, Brian or Nathan. Let me know if you're interested in testing next Sunday. And if we don't get a volunteer, myself or someone else from the precision team will. So yeah, I hope that answers your question about the divergence. And yeah, have a great rest of your weekend, guys. And we'll see you in the next day or 2 here. Have a good day too, bro. Have a good day, everyone.